Hello guys, my name is Ran Chaturanga. My channel is based on management topic. According to that video series, we discuss on accounting equation related concepts. Let's go. Before learning equation, we need to know about entity concept. Entity concept wise looking at business identified as an isolated unit. Reason of that owners and outside parties engagement separately recognized. Business include business process. Business process established on business resources such as machines, stocks, vehicles, land, building, furniture, and etc. Resources built on investment. Reason of that business investment wise resources generate. In the beginning of the business, assume that owner is a invest for all resources. Business resources able to be identified under asset and or assets are built on owner's investment. That relationship was able to build connection assets all values equal to equity value. Ownership. Business initially start up with the basic assets. Initial assets are developed on owner's investment. 1st of January, business started an initial investment wise increases building cash and machinery values. Going on then transaction building amount increases by $2,000. Building come under assets. Reason of that building value put under assets. Building value increases noted with plus mark, but that is not necessary for indicate increases. Value indicate under assets. We need to mention about the asset type. Asset type become a building. Asset type noted inside the brackets. Cash and machines are utilized on the same scenario. Reason of the same scenario utilized on cash and machines. According to that transaction consists with the three types of assets, but all the assets are owner's investment. Reason of that we need to know about total investment of investment. Accumulated amount of assets value equal to investment. 2000 building plus 3000 cash plus 4000 machinery values are equal to $9,000. 9,000 total investments done by owners. All transaction amount connect with the owners that identify under equity. Equity value increased by $9,000 and final impact twice total assets increased by $9,000 and owners obligations increased by $9,000. External investment. Business needed assets for their business operation. Cycle. Initially, owner invests for capital and he has limited capabilities for funding. Reason of that business look at the financial market. Business borrowing money from person who willing to invest for a company. That borrowing amount was built on the obligation based on relationship that impact identified under liabilities. There is few examples. Bank-wise supply loan facility, financial institute support for asset acquisitions, supplier give time frame for payments. Overdraft mean bank current account consists with minus amount. 2nd of January, business take a bank loan. Bank loan offer from bank and its create a payback obligation value. Business liable to return that amount. That's bond value identified under a liability. Mention a source as created liability. Source as a bank loan. Bank loan wise business received the cash. Cash amount increase under the assets. 3rd of January, purchase a vehicle using a finance facility. Obligation built with finance facility and that amount become a $300 noted under a liability. Source of that mentioned as a finance. Asset wise, company received new vehicle. Asset increase as a vehicle. 4th of January, purchase from suppliers. Company stock amount increase and that identified as a stock. Actually, that transaction time does not pay that value of stock. Business need to pay back that amount within a short term frame. Reason of that liability identified as a creditor. Its, its stake increase for a liability values. Income. In previous section, we are discussed about the investment. Investment wise, owners expect to earn a profit. Profit mean difference between the income and expenses. Income wise, we are identified the equity development without the additional capital investment. Income effect on most of time increase the asset amount, but some transaction wise deduct the amount of liabilities. First transaction wise, $100 income received. Reason of that need to identify the source of income. The transaction wise income received as an interest, then income become a rent income. Under the equity, 100 amount of noted down with the source of interest. Interest received as cash. Cash increase come under asset development. Asset category wise, that amount noted down with the asset source as a cash increase by $100. In next transaction is the same scenario in the previous one. Transaction include the income source, that is a rent income. That income identifies under equity. Income amount 200 noted with the income source as a rent. Asset wise increase the cash amount noted down the previous transaction. This is a consultancy fee. This is an income source wise we are identify the consultancy fee charges. It's a come under a equity, but that impact is a bit different. But we did not receive the cash amount at the same time. According to that, we are noted down this come under a debtors. Debtors means we are sell something and cash will be received in the previous time frame. According to that, we are increase the amount of debtors come under assets. Expenses. Expenses wise, equity amount decline without a capital withdrawal. Most of transaction wise, income effect on asset decline or sometimes maybe liability increases. In the first transaction, and going through the activity, first we need to identify what is the source of expenses. According to that, we need to identify what's the source. According to that transaction, we noted that the wages become a source of expenses. Expenses is decline under equity. According to that equation, we are noted that it's just like that 150 amount is identified as a wages, that is a expenses amount decline with under equity. After that, we need to know that how do we paid for our wages. According to that, normally we know that company paid that amount using a cash declined by 150. Then cash is one of the asset is come under asset stream. Reason of that 150 cash amount become a decline. And January 11th, we are know that's 120 electricity bill paid for a month. According to that same scenario is applied in the previous cases. We need to identify what the source. The source of electricity bill. Electricity bill is expenses type, expenses source. We need to deduct that amount under equity. It's noted as a 120 amount decline the equity. How to pay the electricity? Normally we paid using money, then money is a cash we identify as asset decline. In the next case, source of expenses is maintenance fee. We noted that amount as a previous transaction. Transaction wise, it include we need to pay. The source we are no source wise we expenses is maintenance. It's the same as it, but it's need to pay you we use in the future. We need to pay. Reason of that future time we need to settle down that amount. This is treated as an obligation. Reason of that it not under a liability. Liability amount increase on the payable expenses as a payable maintenance. Purchase. Purchase is main expenses of business. Reasoning, manufacturing and usage purpose wise stock required. Stock purchase by using cash or lending purpose. In first transaction as 30th of January, stock purchase 250 amount of cash. And according to that, we need to identify that increase amount of stock. It's amount of that 250 amount of stock are increased. We need to pay for stock purchase. So according to that, we need to identify what the source of payments. According to that transaction, it is cash. Cash is declined by 250. That's the same amount of purchase value. It's noted as 250 stock increase and 250 cash become a decline. Next one is credit based one. January 40th purchase 350 stocks. Stock amount increase. Stock is asset reason of that not under asset. Transaction does not include the any word about that asset become a credit transaction. How we need to identify what the credit a transaction. Example wide, imagine a small shop. Customer come into the shop and paid for a amount and purchase some item. Shop does not concern about who is the purchase. That transaction happened without the money, then shop owner noted that person who is the borrower on the credit base. Same scenario imply on that transaction. Special name mentioned about that's a credit based transaction. After a small time frame, we need to pay and settle for that amount. Obligation generated between the suppliers. Reason of that identify the under obligations amount, and we know that it's come under liabilities. This is a stock increasement and 350 creditors is included. Creditors means when we purchase something without a cash, then we call as a creditors. A credit based liability is generated. Sales. Sales is the main income of business. Sales wise that generate profit, loss or neutral impact. Sales done with over the cost that we call as a profit margin. That impact come profitable. Reason of that may be unable to recover that amount of cost that identify as a loss. 80th of January, the selling amount of $400. Reason of that cash received by $400. Stock value of transaction become $300. That difference between the stock value and the cash received that identify as $100. Profit is return of investment. Reason of that profit is come under equity. We are identified this is differences between the cash received and stock value. That amount become $100. We identify that amount under equity. It's a return of investments. 19th January says received the $200, but the actual cost of $250. Reason of that loss generate $50. Loss amount come on risk of investment. Reason of that loss not under equity. I think that is going on 250 data and 250 stock decline happens, and according to that impact as negative impact is generated. Negative impact is going through the equity. That's a loss is generated by $50. This is a summary of the equation. I think you hope to I didn't understand what I told and all the concepts regarding that equation. No, you have get a basic idea of that. But in that we hope to build up another video of the advanced transactions with the accounting equation. Wait for that and watch that's my next video. And thank you all. And I think you haven't any issues regarding that transaction. If you need to know about something more than, please put under a comment section. I definitely reply on that. Thank you.